Hey guys, it is Julie here with JT.Wealth. In today's video, we are going to be talking about my top 5 stocks for the month of October. So let's get into it. Alright guys, welcome back and thank you so much for being here. Like I said, in today's video, I want to discuss 5 companies that I think not only have great potential for the month of October, but for the long term as well. If you watch my channel, you know that I am truly a long-term investor at heart. So as such, I have tried to create a list of 5 really strong companies, including 2 amazing dividends. The remaining 3 companies include 2 tech giants, plus a newcomer to the SPAC world in the EV realm. So we're going to take a quick look at each company, discuss any recent news surrounding the stock, and then take a look at their future outlook and potential. Personally, I think that all 5 of these companies have some amazing potential growth, and 4 out of the 5 companies do pay some level of dividend. And just before we get into my October stock picks, this is just a friendly reminder. If you do like the video, please give us a big thumbs up. And if you aren't subscribed to the channel, maybe consider doing so. It really helps us grow. Also, consider checking out some of the links below, including my Patreon page, which will give you access to our Discord chat group, or using some of the other referral links to start up a new investment portfolio. And now, with all of that being said, let's jump right into our 2 tech giants. My first stock pick for October is none other than Apple. Their stock ticker is AAPL. Today, we see Apple trading around $117 or so, which is up 2.75% on the day, but down about 13% from some highs we saw around September 1st of $134. Now, looking back, we do know that Apple conducted its 4-for-1 stock split on August 28th, which caused that price spike to those September 1st highs, since which we've seen it settle down considerably. And now that that initial pullback is over, I think it is a great opportunity to buy yourself some Apple stock. Demand remaining high for the MacBooks and Apple wearables like the Apple Watch, including the massive entry into the fitness market with the Apple Fitness Plus subscription service, and the hype surrounding the iPhone 12's release sometime in October, showcasing a range of 4 new phones, including a mini, all capable of providing 5G connectivity. This company continues to provide a lot of excitement. Apple's factory in China, which is often referred to as iPhone City, has been ramping up production of the iPhone ahead of its launch next month. They are working 24 hours a day, offering worker bonuses and canceling holidays to focus on this production. Meanwhile, Apple does have a massive amount of cash on hand. They do provide a dividend at 0.71%, and they boast a net income upwards of 20%. Remember, last quarter, Apple did report an increase in each of its business sections during the pandemic. So I would expect some serious continued growth for Apple over this next year. My second stock pick for October and our second tech giant is Microsoft, and their stock ticker is MSFT. Today, we see Microsoft trading around $210 per share, which is up about 1.6% on the day, but down about 9% from their September 2nd high around $231. So this dip is really creating a strong buying opportunity for anybody that has a long-term trajectory for a company that has seen growth of 50% in the last year alone. Now, there was some recent news regarding a brief scare for Microsoft when their 365 platform had an outage on Monday that affected the Outlook and Teams applications. Luckily, though, this was all resolved within a matter of a few hours. In other recent news, though, Microsoft has declared a 10% dividend increase over the previous quarter, raising their dividend by 5 cents to 56 cents a share. And that is great, but the one piece of news that I feel most strongly about regarding Microsoft is actually a piece of news that caused a bit of an initial pullback at first, and that is the announcement of the $7.5 billion acquisition of ZeniMax Media and its game publisher Bethesda Softworks. This acquisition allows the Microsoft Xbox to continue to compete with Sony. Bethesda founder Christopher Weaver said that what Microsoft owns, Sony cannot get, and that this is an extremely interesting acquisition on the part of both groups. And this acquisition brings some dominant names in the space with it, such as the Elder Scrolls, Fallout, Doom, Dishonored, Wolfenstein, Prey, Rage, The Evil Within, Quake, and the upcoming Starfield. Add this acquisition to the effort Microsoft has taken to enhance cloud-based gaming for PC, in addition to its console gaming and its new Xbox Game Pass subscription service, providing access to both PC and console services and 15 million new subscribers. Microsoft's new acquisition expands its studios from 15 up to 23, and with it, its capacity to continue dominating that space and driving its revenues higher. Okay, now my third pick for October is a newcomer and a SPAC, and that is SwitchBack Energy. Ticker is SBE. This SPAC has agreed to merge with an EV charging station company called ChargePoint. You can see here that SBE has seen about a 2.8% increase so far in the day, trading around that $15.65 mark. And that is up about 50% from some of those pre-September 15th levels around the $10 mark prior to the announcement of their merger. Of course, electric vehicle companies have been the subject of a lot of news lately, with companies like Tesla, Workhorse, Lordstown, Hyliion, NIO, and of course Nikola, all getting a lot of attention. So it makes sense that a company like ChargePoint, who is one of the oldest and largest EV recharging networks with about 115,000 charging points around the world, will be taken public with a valuation around $2.4 billion. Like other recent SPAC deals, this deal does include those PIPE investors, which are going to invest a total of $225 million into the merged company. Now, another thing to note is that ChargePoint is well beyond the startup stage. While it isn't yet profitable, it did have $147 million in revenue in 2019, and it expects to be fully profitable by the end of 2023. Now, assuming all goes according to plan, the merger deal is expected to close by the end of 2020. Now, the future opportunities for a company like this, when the EV market trend is just going upwards and we know that it's going to grow and grow year over year, is really immense. And it's always exciting to get into a stock like this early on. I think the long-term potential here could really be incredible. Okay, now getting into my fourth pick for October, we are starting to talk about more dividend-specific stocks. Now, disclaimer here, I think I have mentioned both of these in some past videos before, but the fact remains that these are still very strong companies whose fundamentals, growth opportunities, and strong dividends means that they really shouldn't be overlooked. So on that note, today's fourth pick is the company Cisco, who are trading under the ticker CSCO. Today, Cisco is trading around that $39 mark, which is up about 0.5% on the day. But it is down about 21% since those pre-market levels just shy of $50, which makes it a great time to buy an undervalued stock at an amazing price, with the potential to reclaim that 20% loss and a strong 3.68% quarterly dividend, which was not cut during the pandemic. Cisco is operating on some strong fundamentals and has a PE ratio of 14.52, which is less than half of the industry standard of 36.71. Future outlook is an important aspect when you're looking at buying a stock, especially if you're an investor looking for growth in your portfolio. Buying a great company with a robust outlook at a cheap price is always a good investment. With earnings forecasted to grow 5% per year and profit expected to grow by a double-digit 19% over the next couple years, the outlook is really positive for Cisco Systems. It is currently trading at 41% below their estimated fair value. It also looks like higher cash flow is on the cards for the stock, which should really feed into that higher share valuation. So if you've been keeping an eye on Cisco for a while, it might be the time to make that leap. Looking at their past shareholder returns, like we said, this last year with the pandemic has been mostly negative for Cisco, making it that great opportunity. But those 3 and 5 year returns, especially with the dividends considered, is quite notable. And on the right, Cisco's volatility is well below the industry and the market's average. So Cisco has a great future outlook that isn't reflected in their price yet, so it is still a great time to get in on it. Now, I, for one, don't want to miss out on that growth potential plus the dividend associated with Cisco. My fourth stock pick for October is another one of my favorites, and for a lot of the same reasons as Cisco, and that is AT&T. Their stock ticker is T. Trading around that $28.42 mark, representing about a 0.44% increase on the day, and a decline of about 27% since those pre-pandemic levels up around that $38 mark. So a lot of companies have seen a faster recovery period than AT&T. They still have a considerable amount to go before reaching some of those pre-pandemic levels. But this makes for a much more affordably priced stock, and it also provides an outstanding 7.3% dividend. And not only was that dividend not cut during the pandemic, but it has been increased for 36 consecutive years. Now, AT&T generates billions of dollars in free cash flow, and their core telecom business generates most of its revenue. The wireless services segment consistently delivers over $13 billion every quarter, and this summer, AT&T rolled out nationwide coverage of its next-gen 5G wireless network. Now, what is really exciting is the company's purchase of Time Warner in 2018, which is now called Warner Media. This did put AT&T into significant debt, but the division is a key piece of AT&T's bundled wireless and entertainment services ecosystem. Warner Media recently launched HBO Max, which is a new streaming service, and packaged it with higher priced wireless plans, driving up customer adoption of those more expensive plans. HBO Max also helped send total HBO subscribers past $36 million in Q2. Now, the company had targeted that total by the end of the year, so helping them meet the goal that quickly really highlights the new service's appeal. So yes, they do have some debt from that acquisition, but in the long term, they will have that managed within a few years, and I think they'll really continue to utilize their HBO Max and bundling services to increase their revenue and to continue to strengthen that balance sheet. But by that time, their price will definitely have increased to reflect those improvements, which is why I think it is a great time to get into AT&T now. Okay guys, so those are my top 5 stock picks for October. I tried to provide a good mix, including some strong growth companies, a really smart SPAC opportunity, as well as some great long-term dividend options to really provide a breadth of options for each investor. I hope you found something of value somewhere in these picks, and please down below in the comments let me know, are you considering buying any of these? Do you maybe already hold some of these? And what other stocks are you looking at for the month of October? As always, please remember, I am not your financial advisor, so anytime you're making an investment choice, make sure you are doing so based on your own research and due diligence. I provide my own opinions for entertainment purposes only. If you made it this far in the video, please make sure to give us a big thumbs up and make sure that you're subscribed to the channel if you're not already. It really helps us grow and helps you stay up to date with all of our latest videos. Thank you guys so much for watching. I hope you have a wonderful day, and cheers!